Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at LM Funding America.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, so this one it's a really drastic corporate transformation story, one of the biggest we've seen in a while.
It really is. I mean, if you were looking at this company, say, a year ago.
You'd see a small, kind of struggling financial firm.
Exactly. But that's not what it is anymore. They have fundamentally hit the reset button.
A total reset. It's now a pure Bitcoin infrastructure and digital asset play.
It's a completely new entity. And that's the crucial context here. The whole investment thesis hangs on this massive pivot they pulled off in 2025.
And it wasn't slow, was it? It felt very decisive.
A hard, fast shift. And now, for the first time, we're actually starting to see the tangible results from that change.
Right. Let's talk about those results. Because after what must have been a painful transition, the top line is screaming positive momentum.
It is. The most recent figures from Q3 2025, their revenue came in at $2.2 million.
$2.2 million. Okay. Is that just a bounce or is that real growth?
It's much more than a bounce.
Yeah.
Sequentially, so, quarter over quarter.
Yeah.
That's a massive 74% increase over Q2.
74% in one quarter.
Yes. That's a clear sign that the new infrastructure is not just working, it's scaling up fast.
That's genuine acceleration. But we should be fair, the past still casts a shadow, right? The trailing 12-month revenue, the TTM, it still looks a bit rough.
That's absolutely correct. Yeah. The TTM numbers are still weighed down by the old business struggling before the pivot. But for anyone looking forward, as an investor, it's this recent trajectory that really matters. The shift is delivering real, rapid returns.
And it's not just about the top line, it's about profitability and the core business model. I think the gains there might be even more impressive.
They are. If you look at the core operational results, specifically EBITDA, it's actually turned positive.
Can you just quickly break down EBITDA for our listeners?
Sure. It's earnings before interest, taxes, depreciation, and amortization. Think of it as the cash flow from the actual business operations.
Got it.
And the fact that it's positive shows real underlying resilience, even with the crypto market being so volatile.
So they're making money from the nuts and bolts of the operation. And speaking of that, the mining margins, they really stood out.
That is the headline figure for their operational success. Direct mining margins have improved dramatically. They hit an astonishing 49% in Q3.
49, and what was that before?
It was 41% just a quarter before.
Wow, so nearly half of every dollar from mining is dropping to gross profit. How does that compare to others in this space?
That is absolutely outperforming most of their peers. I mean, to get margins near 50%, that takes a serious focus on low energy costs and high efficiency.
So they're not just mining, they're mining smart.
That's it. It's the benchmark of operational excellence.
Okay, that high margin is a massive green flag. But let's be the skeptic here. Despite these fantastic operational gains, the company as a whole is still reporting a net loss, correct?
That is the crucial caveat, yes. Overall, when you factor everything in debt, depreciation on the machines, the trailing 12-month net loss was still around $15.74 million.
So that's the primary drag?
It is. The operational efficiencies are working hard to close that gap, but they're not fully self-sustaining just yet. It's a race, really.
A race between operational efficiency and financing costs.
Can they get there before they need more capital? That's the question.
Okay, so let's unpack that capital side, because this is where the story gets really interesting. The balance sheet tells a completely different story.
Yes, they did a very smart strategic capital raise in mid-2025. Brought in about $21.3 million.
And this wasn't just for keeping the lights on.
Not at all. It was explicitly to build what they call a digital asset treasury. They're turning their balance sheet into a strategic Bitcoin holding entity.
And the result of that is, well, it's pretty staggering.
It is. As of late October 2025, they were holding over 304 Bitcoin.
Which, at current market rates, is valued at approximately $34.7 million.
And here, this is the aha moment for anyone looking at this stock.
Right.
You have to look at their market capitalization, the total value of all their shares. It's sitting somewhere between, say, 12.5 and 17 million.
Hold on, let me make sure I'm hearing this right.
Go for it.
You're saying the Bitcoin they hold
34.7 million
is worth more, actually almost double their entire market cap.
That's exactly it. It's a fundamental mismatch. Highly unusual.
And that acts as a huge protective cushion then.
A massive liquidity cushion. It means, theoretically, the assets on their books are worth way more than the market is valuing the entire company at,
So what does that protect them from?
primarily from dilution risk, assuming the crypto market holds up. If they need cash, they can leverage those assets instead of just issuing new shares,
It puts a hard, tangible floor under their valuation.
a floor that many of their peers just don't have.
And speaking of flexibility, their operational setup is incredibly lean, which must help.
Absolutely. They only have 9 employees globally.
Literally.
9
Wow.
people are running this whole operation, which means their revenue per head is over $750,000.
Incredible. So they can scale up without massive overhead.
Precisely. It also contributes to their manageable debt situation. The debt-to-equity ratio is only around 21.7%.
Okay, and let's look at the physical expansion itself. They're building out their own mining infrastructure.
Right. They move fast. They acquired an 11-megawatt site in Mississippi, and crucially, 7.5 megawatts of that is already up and running as of mid-September.
So the capital went to work immediately.
Very impressive speed from raising the cash to having operational capacity.
So we've got a huge transformation, incredible operational efficiency, and a balance sheet that's basically backstopped by Bitcoin. How's the market reading all this? What do the charts say?
Well, technically, the stock is showing clear signs of recovery. It's stabilized off its yearly lows, trading in a pretty tight range between about 95 cents and $1.12.
So the selling pressure seems to be exhausted.
It suggests the market is finally starting to digest this new reality, and the technical indicators are overwhelmingly bullish right now.
Bro.
The price is trading above the short-term 50-day moving average, and it's getting close to that really crucial 200-day average.
And crossing that 200-day is a big deal, isn't it?
It's often seen as the marker for a longer-term trend reversal. Plus, you have indicators like the RSI and the MCD, which are also supporting that bullish momentum.
Can you put that in plain English for us? What do those indicators aligning mean?
Sure. It basically suggests the recent price gains are fundamentally sound, not just a temporary spike. It tells you that the current upward trend has some real strength and depth behind it.
That combination of fundamental momentum and technical confirmation must be what analysts are seeing too. What's the view from Wall Street?
The consensus is exceptionally bullish. They see an upside of over 340% from where it is now.
340%. Wow.
Yeah, the short-term price target range is between $1.20 and $2.50, with a long-term goal all the way up at $5.
That's a massive vote of confidence. So let's look ahead. What are the catalysts over the next, say, 3 months that could actually push it towards those targets?
The Q4 earnings report is number one. It's paramount. We're expecting that late December or early January.
And what will you be looking for in that report?
2 things. First, does that revenue momentum continue? We need to see that growth sustained.
And second, that 49% margin.
Exactly. Can they keep that margin now that the big Mississippi site is fully ramping up? If they can show that margin is scalable, it will completely change the profitability outlook.
What about catalysts outside of earnings?
Any news on that Mississippi site? Full utilization, hash rate growth. That would be a major bullish trigger. And of course, you can't ignore the big one.
The price of Bitcoin itself.
The great crypto correlation. It affects their revenue and their book value directly. A strong crypto rally could generate a huge windfall on those balance sheet holdings.
Further widening that gap between their assets and their market cap.
Precisely.
And it seems management is confident, too. They authorized a share buyback program.
A $1.5 million buyback. It's a very strong signal. It tells the market that the people running the company believe their own stock is undervalued.
Okay, so we've painted a very bullish picture. We have to be balanced. What are the key risks that could derail all of this?
They are significant. First and foremost, volatility. The whole model is tied to the price of Bitcoin. If Bitcoin has a severe correction,
The whole revenue stream is at risk.
and the value of that protected treasury takes an immediate hit. So there's huge uncertainty there.
And what about dilution? You said the Treasury helps with that.
It does. But if crypto markets drop sharply and they keep posting net losses, they might eventually be forced to issue more shares anyway.
Right, which would hurt existing shareholders.
This is why sustaining that operational margin is so critical.
And finally, that debt structure you mentioned. What's the specific risk there?
This is a unique one. They have about $6.9 million in debt that is secured with pledged Bitcoin as collateral.
Meaning the Bitcoin is promised to the lender if they default?
Yes, and it creates complex rules or covenants. If the price of Bitcoin were to drop, say, 50%, the value of their collateral could fall below a required level.
Which could trigger a margin call.
Exactly. They might be forced to sell assets at a bad time just to satisfy that debt covenant. It's a risk that needs very close monitoring.
So, to wrap this up, the thesis on LM Funding America is it's a rare, highly leveraged play on the digital asset sector.
It is built on two pillars.
Yeah.
That strong Q3 momentum with the high margins and that substantial Bitcoin treasury that exceeds their market cap.
Which makes it a compelling setup for a few different types of investors, it seems.
I think so. It's attractive for short-term traders playing the catalysts, but also for long-term investors who want a high-growth entry into digital asset infrastructure.
So it's clear they've made the pivot successfully. The question now shifts from can they change to can they sustain this?
Absolutely. The next few quarters are going to be critical. They'll determine if those impressive operational margins from Q3 can translate into sustained overall profitability. And that raises a really important question for you, the investor, to consider. Can this highly efficient, lean operation outpace the inherent volatility of crypto with sheer operational execution?